Blow my nose real quick. All right. All right. All right. All right. Thank you so much for everybody who is here tonight. And I trust that you will get some info from here to help you get your credit good or start you on your credit journey to build your credit or rebuild your credit. I'm also going to be giving you some tips, some extra tips to help you keep it good, and some things that most folks won't tell you when it comes to your credit. Give me 1 second. Gotta get this now. Gotta get the Zoom started. There we go. All right. So I'm gonna go from here. All right. Let me share my screen. And once I learn how to share my screen on other platforms, I will do so. But good evening, everybody. Welcome, welcome, welcome. Thank you for your patience. For those of you who are out in social media land, um, if you are watching me live, do me a favor, throw a 1 in the chat. If you're watching a replay, throw a 2 in the chat. What's up to everybody who joined me on Clubhouse? Thank you so much for being here. Let me introduce myself. My name is Tyra Jacqueline, aka the Creditator. And I'm going to tell you a little bit about myself. I do have backgrounds in real estate and insurance. And I worked in social services for many years, working with children, worked in residential homes, troubled youth. I also work with the adjudicated population, with people who had mental health and drug and alcohol abuse issues, and worked in a little, and we also worked with the prison system as well. And for the decade, I worked for your favorite 3 letters of the alphabet. Come April 15th, you're going to catch that now, you're going to catch that later. Okay. All right. So I'm going to go ahead and get into this information. First of all, why is credit important? Well, one thing about credit is credit actually allows you to leverage what we call OPM, that is other people's money. And those credit scores, or that particular score that lender is going to pull, they look at your credit score like it's your character. And what they want to know, are you trustworthy? Can I trust you to pay back this money, basically? So your credit report also is equally important as your credit score. Please understand that your credit scores and your credit report are two separate entities. However, they are in a marriage. They are husband and wife, and they should be worked and improved simultaneously. So there are different types of scorings. The most important one is your FICO scores, but there's many different types of FICO scores. We're gonna get into that. You may see simulated FICO scores. You see stuff like that on Experian.com. That's what you call a simulated FICO score. But the one you see the most is called a Vantage score, and you'll see those on things like Credit Sesame, Credit Karma, and you see those a lot. And they were actually created by the 3 credit bureaus. So let's talk a little bit about the Vantage score. It's a consumer-based credit scoring model created by the 3 major bureaus to kind of compete with the FICO scores, but it's calculated differently. And it's also jointly owned by the 3 credit bureaus. So the Vantage scoring actually has 6 factors that they measure it with, and that is available credit, payment history, utilization, balances, depth of credit, and recent credit. Now, anytime you see 6 factors calculating credit, that means it's a Vantage score. So the payment history is 40%, your utilization is 20%, your credit age is 21%, credit mix is 11%, new inquiries are 5%, and available credit is 3%. So that's just a little bit about Vantage score, but Vantage score is not really important. What's important are your FICO scores. So FICO scores go all the way back to 1956. They were created by 2 men. And FICO actually stands for Fair, Isaac, and Company. FICO, by 2 men, Fair and Isaac. So Fair was an engineer, Isaac was a mathematician. And they basically came up with the FICO model to basically analyze credit risk for people that want to borrow money. Your FICO score is actually broken up into 5 different parts, 5 factors. So like I said, if you see a credit scores with 6 factors, that's a Vantage score. Credit scores with 5 factors, that is your FICO score, and that's what matters. So let's get into actual the breakdown of FICO scores. So the biggest chunk is 35%, which is your payment history. Listen, pay your bills on time. Paying everything on time is super duper important. And even if you only got a little bit to pay, when it comes to credit cards or whatever your type of loan that you have, please pay at least the minimum. And please understand, when you are late one time, that undoes 3 late payments. Okay, that's how serious late payments are. Okay, so if you wanted to actually calculate your FICO and how much you can actually get, you take the number 850 for each factor. So for payments, if you multiply 35% by 850, that's as high as your FICO score can go for the payments, okay? Normally, no one will actually report at 0, meaning for people who don't have any credit or their credit invisible, a lot of times it takes about 6 months for somebody to actually develop credit, personal credit. Let's talk a little bit more about late payments. So as I stated, 1 late payment undoes 3 payments, and it actually takes 9 months to recover just from 1 late payment. 1 late payment will drop your score 50 to 100 points. But what I need you to understand about late payments, it does not affect you just that one time that you make the late payment. No, it affects you the entire time, every 30 days, until the payment gets owed or the payment gets removed. So if you only had 1 late payment, and that means you do have a good relationship with your creditor. Those payments can be forgiven if you have maybe 1 or 2 late payments, but anything other than that, they really don't get forgiven too much. But they can be forgiven with something called goodwill letters. Also, another trick that I've learned to maybe help forgive some late payments, and it's a try, is to email the CEOs. Basically, explain your situation to them and what happened and why your payment was late. And they may just go ahead and forgive you and update that late payment. But late payments can be undone through the credit repair process. So when it comes to actual payment history, and some of you guys may see this on Credit Karma, it's just a mathematical equation, a simple mathematical equation that payment history basically equals your on-time payments divided by your total number of payments. So let me give you a quick example. Now, for somebody who has good, great, excellent payment history, let's say they have 1,000 payments on file and they only made 1 late payment, meaning they have 999 on-time payments. Well, when you divide 1,000 into 999, then that means your payment history is going to be 99.9%, which is basically excellent payment history. However, let's say you have a very thin credit profile, and or your credit is new. Let's say you made 3 payments, but 1 was late. So now you are dividing 3 into 2, and what that gives you is 66%, which means now that your credit for your payment history is very poor. So anything under 97% when it comes to payment history is considered very poor. Like I said, a simple mathematical equation. So the next set of factors for calculating an actual credit score, 30% is utilization. Now 35% is payment history. That's the biggest chunk. The next biggest chunk is 30%, which is your utilization, and this refers to your credit cards. So please understand, when you run your credit cards up, that's going to eventually drop your score. There are actually utilization thresholds that where your score will drop or increased based on where you are on the utilization scale. And those scales are 8.9%, 28.9%, 48.9%, 68.9%, and 88.9%. So if you open up, let's just say you use Credit Karma and your credit card utilization is at 88 and above, that means your credit score is going to drop dramatically. However, let's just say you had your tax refund, or you come to some money, or you take a personal loan and you pay those cards down. Let's say you pay it down to about 8%, then now your credit scores are going to increase drastically. Okay, so the parameters are between 8.9% and 88.9%. So please keep your credit cards low. Okay, the rule of thumb is to keep your credit card balances between 0 and 9% each month. So when it comes to credit card utilization, let me give you a quick example of what your credit card utilization looks like, what it should look like. Now, the myth is that your credit card should be at 30%. So people think that as long as they keep all their credit cards at 30%, then they're okay. Unfortunately, that is incorrect. So let me give you a quick example, just with simple math. If you have two credit cards, both of them have a $500 limit. Your balances should be no higher than 30%, and this is the total balances of both cards, then the total balance, then the total of the amount of credit that you have for the cards. So if you got two credit cards and both of their limits are $500, then that means the total limit is $1,000. These two credit cards you have, each one of them, those balances should be no higher than 150, because if you add 150 and 150, that's 300, which is 30% of 1,000. Okay, so do that math in your head. $300, 30% of $1,000. There's also a basic formula that you can use to tell you exactly where your credit card balances should be, where you should bring them down in order to increase your credit scores on credit utilization factor. You would take the credit limit of each credit card, multiply that by 0.06289, and that's where your balance needs to be. All right. So there's some other things that you can do to help you increase your credit scores when it comes to your credit cards, or even just put you in a better position when it comes to your credit cards. One, this is what you should do. Call the credit company, your credit card company. Ask them for an increase in the credit limit. Ask them for a decrease in interest. And if they say no, ask to speak to your supervisor. Or you can ask for what's called a product change, which will have better terms than what you're currently paying with your credit card. Now, you can't do this for for like 6 months. You can only do this like every 6 months or every year, with depending on the company that you have. But it's worth doing. Give it a try. And like I said, if they told you no, speak with a supervisor. All right. So the next factor on credit is your age, credit age, which is 15% of your credit score. So please always remember that old credit is good credit. Okay, keep your accounts open as long as possible. Now, I understand if you pay off a car, or if you pay off a mortgage, something like that, or you have some type of loan and you pay it off, that is what it is. But since credit cards are so important to when it comes to credit, because credit cards put back into your credit 90%. Keep them credit cards open. Do not close them. Do not call them up and say, close this account. Do not pay them off and never use them again. Don't put them under your mattress. Do not do those things. In order to keep your credit good, you actually have to use it, okay? So your credit age is calculated from the time the account was open. Also, the time since your last activity. Like I said, use your credit cards. Lenders like long credit history. They like 9+ years the most, okay? All right. Now, the next 10% of your credit factoring is a 10% credit mix, which is different types of credit. The different types of credit, you have revolving accounts, you have installment accounts, you also have mortgage accounts, and there's also other accounts now called self-reporting. These are basically trade lines. And to maximize the number of points for this, you need 21 plus accounts actually. So let me explain to you the differences between revolving and installment lines of credit. Well, lines of credit accounts, I should say. Revolving lines are basically credit cards, and they're basically revolving. Number one, the payments are going to be different every month for the most part. There's not a fixed set of payments. Plus, you're going to use that card, pay it down, use it, pay it down, like a revolving door, correct? And installment accounts are accounts like your car note, personal loans, because they have a fixed amount that you're paying each month. And the next 10% on credit factoring is what we call hard inquiries, new inquiries. So anytime you are applying for new credit, you're going to get a hard inquiry. Okay. If they are doing a soft pull, most likely it won't show up on your credit. Sometimes it will. But hard inquiries do make up for 10% of your credit. And every time you get a hard inquiry, it will knock your FICO score down just a couple of points. So anytime you're applying for new credit cards, new loans, you're getting a hard inquiry. The rule of thumb, you want to keep them under 5 each year for personal credit. Now, after 2 years, they automatically fall off. With soft inquiries, if they do show up on your credit report, they come off after a year. Okay. And yes, inquiries can be removed also. If you're going through the credit repair process, they can be removed. As long as they're not tied to an open account. Your rule of thumb is to keep the inquiries at 0 to 2 inquiries each year, but don't go more than 5, because always remember, you don't want to look desperate for credit. Now, ways you can monitor your credit, you can use annualcreditreport.com, which is recommended by the Federal Trade Commission, but you only get that for free once a year. If you do it again, you will have to pay. Now, to actually retrieve your correct and your true FICO scores, you have many of those, which I'm going to get into in a second. There's it's called myfico.com, and they're going to send you all of the different FICO models, and that's about a $30 charge each month. So something else we need to talk about, because what I need y'all to understand is the 3 major credit bureaus actually are just holders of our information. They really don't have our information. They got to go to other entities to get our information. This information is held by what we call third-party reporting agencies, and there's different ones that hold different information. And I'm going to talk about the most popular ones. Number 1 is Chex Systems, and that is CHEX. It reports data on bank accounts, basically, and credit union accounts. Okay, so if you owe a bank money, your information will be in the Chex system. CoreLogic, this actually holds information for like payday lenders, auto financing, leasing, subprime credit cards, cable companies, things like that. Then we have things like Innovis, who actually provide identification information, fraud detection. SageStream, they report information from Consumer Reports, auto lenders as well, credit cards, retailers, utilities, and cell phone providers. And then we have LexisNexis, which hold public records. They're big, okay? Real estate transactions, bankruptcies, liens, professional licensures, judgments, historical addresses, stuff like that. LexisNexis is a heavy hitter, guys, okay? So when you're in the credit repair process, it's actually good to freeze these accounts, okay? So let's talk about these FICO scores right here. And actually, from some of those, their third-party reporting agency, this is actually where your FICO scores come from. So there's multiple FICO scores. There's about 28 of them altogether, but there's different models. There's FICO 2, FICO 4, FICO 5, FICO 8. There's FICO 9. But the thing about it is, whatever industry you're applying for something for, a lot of times they use different models. That's why if you might be applying for a credit card and they say your FICO score is this, and then you get a card that's saying your FICO score is that. That's because of the different types of FICO scores that we actually have. And I just want to give a shout out to everybody who's watching and listening to me. Thank you so much for tuning in. All right. So this what's widely used the most is FICO 8. FICO 8 is used the most. Okay. Then we have the mortgage lending company. They use a lot of times they use FICO 5. Auto lending, they use the auto score 8. We got credit cards, they use 8 or 5, depending on the lender. And then there are some places that use FICO 9. Okay. All right. So, what's important with building credit scores? Remember, I said that your credit report and your credit scores are two separate entities. However, they are in a marriage. What you need to understand is that you must keep your accounts positive and good in order for your credit score to actually increase. So, I don't care what you're doing. If you not being responsible, it doesn't matter how many trade lines you actually have, because what's going to happen is your credit scores won't increase. So what you need to do is actually mute yourself, please. Thank you. Um, when it comes to increasing your credit scores, no matter if you're just increasing your scores or if you're in the credit repair process, you need positive trade lines, which are positive accounts. So here are some examples of positive accounts. We have credit cards and secured cards. Those pretty much go without saying. We have credit builder loans. And let me tell you how credit builder loans is. Yes, they are loans, but they are small. So they're not going to affect you if you're trying to buy a house, something like that. So how credit builder loans work, let's just say, for example, there's a particular company that's going to loan you about $750. And what you're going to do is make payments on that monthly. And how that works is they actually report those payments that you're making monthly, and they're small payments at that, to the credit bureaus to help increase your credit scores, and they are very, very, very effective. Trust me. Another thing is the Care credit card. I'm gonna come back to that because I'm gonna have to explain how that's different than regular credit cards. Personal loans, that goes without saying. You got mortgages, you got car notes. Something that's real that I'm really trying to push people to do is to report their rent to their credit report to increase your credit scores. Okay. And what's decent about rental reporting is the fact that it actually helps improve your credit on two of the factors of credit. It goes into that whole 35% of payment history and that 15% of account history. So we're talking about adding back into your credit score 50%. Okay. Excellent, excellent, excellent. And that's called a self-reported trade line. And then we have what's called authorized users. Okay. And there's co-signers as well. And this is for credit cards that I'm speaking about specifically. For the most part, authorized user has many of the same rights as the credit card owner. But the whole idea, the whole goal for an authorized user is to help them increase their credit score by jumping on and piggybacking on somebody else's credit card. Now, this person needs to be responsible. They already need to have good credit, and they need to use their credit card responsibly, meaning that they don't use the card much, or if they do, they pay it off. But what you would need to do is make sure that that person, number one, has long account history and they pay their card on time. So if you're going to be an authorized user on somebody else's card, please make sure they are responsible. Don't just hop on anybody's card thinking you're going to increase your credit score, because whatever they do with their credit card, that's going to reflect on your credit card. It works the same way as people who co-sign on cars. So if a person misses a payment, that's going on your credit as well. All right. So let's talk a little bit about this Care credit card. It is an excellent way to help you increase your credit score. I actually love the Care credit card. It's used for medical expenses. It can also be used for pet medical expenses as well. It's not real stringent when it comes to the things that's needed to apply. You can have as low as 620 credit score. It reports to all three credit bureaus. It's accepted at almost 300,000 providers around the country. The application is simple. And there's also a 6 to 48 month interest free period. But here's the catch with Care credit cards: you have to pay the entire bill off during that interest free period. Because if you do not, the interest is retroactive. And let me explain what that means. Let's say you get this Care credit card for $10,000 when you opened it up. You got the 48 month option. However, you've paid everything off except for the last $1,000, and now is month 49. Whatever that interest rate is for that particular card, you're actually going to pay interest on the entire 10,000 and not the 1,000. So that's how a Care credit card is different than a regular credit card. So if you go with a Care credit card, excellent for building credit, but you just got to pay that bad boy off in that time. Okay. All right. So here's just a few example of some secured cards. We got First Latitude. They do report to all three credit bureaus. You got Discover It, Capital One, Open Sky, Capital One, Quicksilver, and Bank of America has a secured card for cash rewards as well. Just want you, some things I need you to pay attention to when you actually have a credit card is you want to make sure that this credit card's reporting, where are they reporting? Because it's very important, because not all credit cards report to all three credit bureaus, okay? And not just that, if you see here on the example, that Equifax and TransUnion, they're both updated, but Experian is not. So remember, the three credit bureaus are independent of each other, right? And then remember when the Apple Card first came out, the reason why I'm showing this, it used to only report to TransUnion. I believe they report to at least one other credit bureau now. But I know that when it first came out, it was only TransUnion. But the reason why that's important is because you want to know before you apply for a credit card, what credit bureaus do you report to? Get a credit card, a secure credit card that's going to report to all three credit bureaus. Credit card, regular, unsecured, or secure. Get one that's going to report to all three. All right. And as you see, things, same thing here with the Discover Bank. They don't update on the same date. Right. You see right here it says none reported. Right here it says no update received. And the credit utilization at 50%. All right. So as stated, do your due diligence when applying for a credit card. And what you want to research is the interest rate, if it has annual fees or not. Avoid any credit card with monthly fees. If you're going to get a secured credit card, consider how much you're mandated to put down. Because for some secured credit cards, you have to put down at least $200 or $300 at least. That Latitude card, you only have to put down 100. Okay. And if you can get an unsecured credit card, please do. Keep in mind as well, because this can happen. This happened to some hard-headed clients of mine where they went ahead on their own and actually applied for a secured card instead of asking me what they should do. So it got turned down. So even though you are starting with your own money, and that is the difference between a secured card and an unsecured card. With a secured card, you have to start with your own money. It's basically a security deposit. Why? Because your credit scores or your credit report is too low to the point where they say, well, we can't trust you with unsecured funds. You have to start with your own money. And many secured cards too can become unsecured, or they'll give you your money back after a certain time. Just want to let y'all know, in case y'all didn't know, bad credit is expensive. In 2021, the total spending on interest and fees was $305 billion, and I got that stat right here from this website, finhealthnetwork.org. It was even higher in 2020. It was at $319 billion in 2020, and the only difference why it was lower is because of the pandemic. We wasn't paying our student loans. So come next year, 2023. It's going to be even worse because it's going to be time to pay those student loans back again. So as you see, interest and fees, and this includes bank fees as well, like overdrafts and things of that nature, $305 billion. And if anybody have any questions, we are going to wait till the end to answer any questions. Y'all can put them in the chat. Y'all can For those of you who are here with me on Zoom, you can go on unmute yourself when we get to that point. All right. So let me just give you a few examples right here. A person with 560 credit scores compared to a person with 740. The person with the bad credit interest rate is over 3 times more than the person with the good interest. And all in all, the person with the bad credit is paying for this house twice, 3 times. 2 times more than the person with the good credit. All right, let me give you another example. The person with the bad credit is paying a 14.99 interest rate for a 23,000 Toyota Camry, when the person with the good credit is only paying 1.99. All in all, the person with the bad credit is paying 9,600 more than the person with good credit. As stated, bad credit is expensive. Good credit is cheap. So if you are in the credit repair process, or you're considering, you need to understand that credit repair is an investment in yourself now for you to save money later. Because over your lifetime, if you keep bad credit, you pay more for everything. Please understand that bad credit is a perpetual cycle that people choose not to get out of, and they stay in, and that means they're going to pay everything. They're going to pay more times over for everything. So while you are in the credit repair process, build your credit at the same time with trade lines. As I stated, credit scores and credit reports are in a marriage together. Continue paying everything on time. Pay down what's spent on those credit cards. If you pay those credit cards down dramatically, your credit scores will go up dramatically. And one question I do get a lot is, why is each credit score different on the credit bureaus? Number one, the credit bureaus do operate independent of each other, and all debtors do not report to the same 3 credit bureaus. They can be reporting to one, they can be reporting to 2, or they can report to all 3, or they may not report at all. Reporting to the bureaus is actually voluntary. Here's some more tips. So, and the reason why I threw this in, because a lot of people make a mistake here when it comes to purchasing cars. I've been seeing people with upwards of 50, 60, and 70 inquiries, all because of their bad credit, and they keep trying to apply for cars that they know they can't get. Yet, what you don't know is that your credit get ran for each lender that they are looking to help you with to get a loan for the car. And each time your credit get ran, your FICO score is going down a few points. So it's basically a double whammy. So when you work on your credit and you get it better, you get it good, let me give you a tip on what to do. Pull your credit scores from myfico.com. Pull your credit report, and this all has to be within 30 days, from annualcreditreport.com. You're actually going to take that to the car dealer and say, this is my score, this is my credit report. Don't run my credit 50 times. Tell me what y'all can do with this, okay? Another thing you can do, if you have a relationship with a credit union, get a pre-approval and a check from the credit union. Sign it over to the dealer where you are to buy your car. Why? Because a lot of times you get better interest rates and everything with the credit union. When you are applying for personal loans and or credit cards, there's some information you do want to research. You want to know what scoring model is being used, what credit bureau they pull from, and the biggest thing is, what credit bureaus do you report to? It's best to get items that are being reported to all 3 credit bureaus. Here's a couple of more tips. If you are in debt and have collectors calling you, you want to, and if you are, especially if you're in the credit repair process, but even if you're not, you don't want to talk to these people, okay? Advise them to send the information in writing to the address on file. Do not give them your personal information. Do not admit that debt is yours, and never provide your bank information so they can take it out of your bank automatically. Don't do that unless you're getting on some sort of payment plan. However, if you're working with attorneys, or if you're doing the credit repair process, this is what you want to do, okay? So I want to talk a little bit about something that came out recently within the last few weeks that's going on in the credit world. There is another FICO model out. It's actually been out for a couple of years, however, just haven't been accepted. Recently, the Federal Housing Finance Authority has approved the FICO 10 and the FICO 10T models. And the reason why that's important is because this new scoring model is going to hurt people. Okay, this new it's only going to hurt people that's not responsible or that don't clean up their act when it comes to their credit. So, which also means the credit standards may change if you're looking to purchase a home. Now, this has yet to be adopted by the major credit bureaus and lenders, so we still got some time to get your credit right. So, but it's going to be slowly. People are going to be adopting these actual FICO models, and when I'm talking about lenders and companies and things of that nature as well. So, first, let's talk about the negative effects and how FICO 10T is actually going to hurt consumers. Okay, so the difference between what we currently have out there for FICO and with this FICO 10, this is going to start doing what's called a look back period. This is also referred to as a memory element. And what that means is it's going to look at your past behavior, especially when it comes to credit cards. Like, do you like to run your credit cards up and then you pay them off? Because as stated, when you run your credit cards up, your credit score goes down. However, let's say you come into some money and you pay them off completely. What happens is eventually your credit scores are going to jump up drastically, but your credit does not remember that. Okay, that's called the no memory element. What's happening with the FICO 10 and FICO 10T model is that no memory element is going to go away. Okay, they're going to know about your past behaviors. And because you had those past behaviors, this is how they're going to predict your future behavior. And that's going to penalize you credit score wise. And this can affect you up to 20 points. 20 points with your FICO score is a very big deal. That can be the difference of all types of points on interest anywhere. Okay. Also, another bad effect that's going to happen is going to be with late payments. I already talked about how bad late payments hurt you, but you're going to be penalized even more harshly now for late payments and delinquencies. Also, with authorized users, you're going to see less of a benefit than you did before. I've known people that got on other people's credit cards as authorized users, and within a few months, their credit score went up 100 points. But when this FICO is going to be adopted, not to say that you won't have any benefit, you will, but it just won't be as strong as it was as it is now. Now let's talk about the positives of FICO 10. Number one, medical bills will have less of effect on your credit and your credit score and getting approved, which they shouldn't be anyway, because we got some people out here who was sick and fell on hard times with their health and all that good stuff. But it just is what it is. And then please remember that next year that medical bills at under 500 are supposed to fall off. But please remember, guys, anytime we're getting promised something that's going to benefit consumers, don't expect that to happen immediately. Don't expect January 1st, that's all that stuff's going to fall. No, it's gradual, and who knows how long that's going to take, okay? Next thing is they will now take in more consideration now is that self-reported trade lines I was just speaking about. It's also called alternative credit data. The number one thing, especially that I love to educate on, is adding your rent to your credit report. Please add your rent. If you are not using your rent to actually increase your credit scores, you are hurting yourself. Please do. Okay. Also, your subscriptions is a great self-reported trade line as well. I'm talking about Netflix, Hulu, Pandora, your cell phone, stuff like that. There are services that will do that as well. And I am not speaking about Experian Boost. Experian Boost is just for experience. But no, there are services that will do this, that will report to at least two of the credit bureaus, 2 or 3. I don't remember which one. And coming pretty soon is you're going to be able to have your car insurance reported as well. It's actually a project that I'm working on. I'm going to explain that in a little bit. But yeah, these are self-reported trade lines. And with this FICO 10 model, we need this more now than ever, because you need to understand, like I said, this FICO 10 is going to hurt a lot of people. but self-reported trade lines is going to help very much. So as I stated, it's the best time more than ever to actually get your credit fixed together. So in conclusion, got some more tips for credit building. Just to wrap everything up. Number one, pay your bills on time. Set your bills on auto pay. Okay, you want to at least pay the minimum. Make more than one payment if you can to help reduce interest. Dispute credit errors if you are doing that through the credit repair process. Never do that online. Also, there's certain things that you can contact the fraud department with when it comes to the credit bureaus, especially when your information is incorrect or when it comes to inquiries. Ask for higher limits and lower interest rates on your credit card. Ask for that product change with no credit check. And the cool part about asking for the product change is it's still going to keep your account history. Open up a secure card. Actually, I advise that you open up two. Start with one if if the funds are tight, and then in a few months get you another one. Keep your credit cards open as long as possible. Use different types of credit. Monitor your credit report at least once a month. I would say at least twice, for real, for real. Monitor your credit and your bank statements. Okay, make sure nothing's coming out all unauthorized, or because ID theft is rampant. People get their identity stolen every 3 seconds. Okay, set up fraud alerts. Have those fraud alerts come to your cell phone so they text you and email you. Identity theft protection is a must. Okay, and stop using debit cards. Stop using debit cards, okay? Please remember, every time you swipe your debit card, you're putting your entire bank account in jeopardy, okay? I don't know if you've ever had your debit card hacked, but it does happen. And by getting it hacked, they can get all your money. So, yes, we know that if it's proven that you didn't make those purchases, that they'll give you your money back. But remember, how long is it going to take them to do that investigation to get your money back? Mm-mm. Um, get credit cards. Use your credit cards and just pay, what you normally use in a debit card, pay that off with your credit card. Or if you can't get an unsecured card, use the secure card. Get a secure card. It's the same thing. You're going to use your money anyway with the debit card, so use your money with the secure card. Debit cards do not increase your credit scores, but credit cards do. And as always, keep yourself educated. Okay. If you need any assistance, here's my contact information. You can text me at 844-243-4901. Also, you can email me here, tyraj1@gmail.com. I have an ebook of a free ebook of credit tips with this website here. Also, I am on all the platforms: Facebook, Instagram, TikTok, and YouTube. Okay, you will be able to see this video on YouTube, but it won't have the slides. That's why you need to be here. Okay. And as I was stated, I am working on a huge project to have your car insurance added to your credit report as a self-reported trade line, just like your rent. Right now, we have an early subscriber list at the website right here. So when we go live, you'll be one of the first people to be notified. The actual website is called ScreeCred. So it's www.screed.com. And the cool part about this, it works the exact same way as reporting your rent to your credit report. But here's the good thing about it. Even though after you move and you buy your house, you're not paying rent no more. No. But as long as you got a car, you're always going to need to pay car insurance. So why not reward yourself with paying your car insurance? Okay. You're always going to have to pay it anyway. Add that to your credit report and increase those credit scores. Okay. So that's the end of my slideshow for now. All right, looks like I only got one person left on my Zoom, but for anybody else that's watching in social media land, if you have any questions, go ahead, throw your comments in there. If you, let me see who's left. Angeline, do you have any questions that I can answer for you? You can take yourself off mute.
I don't have any questions at the moment.
Okay, excellent. Okay, so for those of you who are in social media land, please follow me. I'll follow you back. And you have any questions for me, you can inbox me. You can text me at that number, 844-243-4901. I see somebody's answering. Okay, she didn't ask a question. She just said she'll be contacting me later. Okay. All right. So if you know anyone that needs help with their credit, they need some tips, they need trade lines, or if they need credit repair, whatever, I do free personal consult do free personal credit consultations. So and I'm gonna be back here at 8 o'clock Eastern Standard Time again, doing this again. You are welcome to join me. All of you are welcome to join as well. Because on Tuesday, at 8 o'clock Eastern Standard Time, I'm actually going to be talking about business credit and establishing your business properly to get business credit. And Thursday will be for your personal credit. So, Angeline, you know how to get in contact with me if you need me. Please also go to that website for ScreeCred, get on the early subscriber list. We'll be going live soon in a few months. We're getting some things together. I appreciate you being here, Angeline. And like I said, if you need me, you know how to get me. And you can join next week, of course, if you like. And if you are in need of my services, my personal credit consultation is free. All right.
Thank you, and I will be attending.
All right. I appreciate you for that. And bring some friends with you next time. All right.
Of course, I will be.
Okay, let's spread the love. Let's spread the education. Okay.
Okay.
All right. You have a great night.
You too. Thank you.
You're very welcome. All right, guys. So I'm gonna wrap it up. You guys have a great night. You can always play it back on my page. If you subscribe to my YouTube channel, I will put that in the comment section as well. On my YouTube channel, you can see all my videos. All that stuff is there together. Okay, so go ahead and subscribe to my YouTube, and you guys have a great night. And those for you in TikTok land, I don't see any comments or any questions. Or how are y'all doing? Thank you so much for hopping on.